Hi, this is Matthew Cratter from Trader University. Now, if you still own shares of Tesla, or you are looking to make a lot of money betting on a Tesla stock crash in 2019, you are going to want to watch this video all the way to the end. That's because I'm going to show you what I believe is a smoking gun. I believe that Tesla is in a serious cash crunch and is even committing accounting fraud. Now, what follows is not investment advice. Tesla is a risky stock to be long or short, and what follows is just my personal opinion. That being said, for the sake of full disclosure, I want to tell you guys that I'm long a bunch of out-of-the-money puts on Tesla. So I've been making some bearish videos on Tesla the last few days, and I've been getting a lot of pushback from the bulls. Isn't Elon Musk a genius? Aren't electric vehicles the future? Well, yes, these are both true. Electric vehicles are a great idea. Musk is definitely a genius, albeit a rather eccentric genius who likes to really push the envelope in terms of what is allowed. But the only problem is that Tesla as a business is not sustainable. I know many people who have their cars and love their cars, and if they don't explode on you when you're driving or the wheel doesn't come off, they're great cars to drive. But the problem is Tesla is not a sustainable business, and we need to distinguish between the cars and the business. It's easy to get all caught up in the sexiness of the cars. Now, why is Tesla not a sustainable business? Well, sustainable businesses do not suddenly shutter most of their stores and service centers, as Tesla announced that it was going to be doing last week. Now, in January of 2019, its vehicle sales number was terrible. February number was even worse. You guys can look these up online. And now they've announced that they're moving to an entirely online sales strategy. So I'm expecting its March vehicle sales number to be even worse. And this will be increased by the fact that Musk announced to his employees last week that Tesla is going to be significantly reducing their spending on sales and marketing. Again, this is not something that a growing business does unless that business is facing a serious cash crunch. Now, this is a company that just last year was still opening up stores. Last year, in 2018, it grew its employee headcount by 30%. And now, all of a sudden, in 2019, even after reporting being profitable, it's suddenly closing those stores and reducing its employee headcount by 7%. And that comes less than a year after Musk vowed never again to lay off another employee. Musk also said last year that the company would be profitable moving forward indefinitely, and now he's saying that Q1 2019 will show a loss. Recently, last week, when asked whether Tesla will be able to sell the new $35,000 Model 3 at a profit, Musk declined to answer the question. So I think we know what the answer is. At least at this point, until they reach some sort of scale, they're going to be selling those new cars at a loss. And in addition, in a desperate attempt to raise cash, Musk is slashing prices on existing inventory. This is a company, I can't emphasize enough, that is rapidly running out of cash. They're currently unable to make money selling cars. And in the past, the only way that Tesla has been able to generate cash flow is by selling stock and selling debt, which of course dilutes the current equity holders and levers up the company. Now this access to the capital markets, to the debt market and the stock market, is essentially closed since Musk is in trouble with the SEC and his cars are being investigated by the National Transportation Safety Board, the NTSB. Now at this point, the bulls will probably say, but isn't Tesla sitting on plenty of cash? They just paid off, even after paying off their big convertible bond last week. How can they be in a cash crunch? In a minute, I'm going to show you why I believe that Tesla is actually lying about their cash levels. But first, let's remember a couple things about the tremendous employee turnover, especially among executive officers. Last year, Tesla had 2 chief accounting officers quit. Every year, they have a new CFO. And now, most recently in February 2019, the new general counsel, who'd only been there just 2 months, immediately left. So what are these people seeing that's making them want to jump ship so quickly? Here's a car company that's finally profitable. They're coming out with their low-priced common man vehicle. Why are these people running as fast as they can? And when they leave, they're always saying they want to spend more time with their families. Does that mean they're quitting because they want to spend less time behind bars, less time in jail? As I said, I believe that Tesla doesn't actually have as much cash as it says that it does. In fact, I believe that they're committing serious accounting fraud at many different levels. And I can show you more complicated demonstrations, but for the purposes of this video, I'm going to show you a single, fairly simple example. This does involve some accounting, But there are a lot of Tesla bulls out there that I've spoken with who have never looked at the financial statements, which just boggles my mind. So let's look quickly at the Q4 report. And if you go to the balance sheet, this is Q4 2018. Go to the balance sheet and you look at current assets. And you look at cash, cash equivalents, and restricted cash. Okay, we're going to take that number. So that's basically the end of the year 2018. We're also going to go look at the end of the third quarter, so the end of September 2018. We're going to look at the cash that they held there. Cash, cash equivalents, restricted cash. Okay, so now I've put this on a screen to make it a little easier to see. Bear with me. Okay, so if you add up those numbers, Tesla had $3.877 billion in cash at the end of Q4. Let's make this a little bit bigger. At the end of Q3, they had $3.125 billion in cash. So these are obviously nice numbers. This was before they paid off their convertible bond. Now, for the purposes of this calculation, we're just going to average those two numbers to get a rough idea of how much cash Tesla was holding in the fourth quarter of 2018. So in November, October, November, and December. And we end up with approximately $3.5 billion in cash held during that quarter. Now, if we go back and take another look at their financial statements, and we look at Q4, the quarterly report. This is from the 10Q. Obviously, I took this from their website. And instead of looking at the balance sheet, we're going to scroll up here and we're going to look at the income statement for the 3 months ending December 31st, 2018. And we're going to look at interest income right here. It's this line right here. It says they earned $7.348 million in interest income. This is basically money that is earned on their cash. So let's go back to our other sheet here. So Tesla earned about $7 million in interest income for the fourth quarter. Now let's take that $7 million and divide it into 3.5 billion. So it's essentially, if you have $100 in your savings account and you earn $1, you divide the two and you find out you're earning a 1%. You have a 1% yield or 1% average interest rate. So we're going to divide 7.3 million into 3.5 billion. We end up with a quarterly average interest rate of 0.21%. Now, if we annualize that, just multiply it by 4 because there are 4 quarters in a year, we end up with 0.84% annualized. Now, as everyone knows, you can get T-bills, you can get money market accounts. Tesla should be earning more than 2% on their cash. But for some reason, they're earning less than 1%, which is even less on an annualized basis than they earned in the third quarter. Now, this shows two things. One, they're really bad at cash management. They don't know where to invest their cash. I find that very hard to believe. If so, they should give me a call. I'll invest their cash. I can more than double what they're receiving here very easily, and so could you, just opening up simple bank accounts or buying T-bills. The other alternative is that this cash is not really there all quarter. And what they're actually doing is playing games with their cash balances. Because if the cash were there, they should be making much more in interest income. Now, some of this cash is overseas, some is restricted cash. I understand that. But either way, they should be earning twice as much, 3 times as much on an average interest rate basis. So I believe that this shows they're playing games with their cash balances. And what they're doing is they're basically doing some sort of transactions so that at the end of every quarter, it looks like they have more cash than they actually do. Now, no company ever pretends to have less cash than they actually do, especially when they're being accused of having a cash crisis. So I believe this is a very clear indication, it's a smoking gun, that Tesla is playing games and that they're fudging their cash numbers, which is a very, very serious thing. So I would urge everyone, if you still own shares of this stock, make sure you understand the company. I could be wrong, but there's some very funny stuff going on with the accounting. If you guys like these kind of accounting videos, I can do more of them. There's some bizarre stuff going on as well that's a little more complicated to explain. But again, if you own these shares, take a look at the financial statements and don't just tell me about how great their cars are. Now, if you enjoyed this video, I'm going to have more Tesla pieces coming up. I'm also going to have more trading and investing strategies, so please hit subscribe so you won't miss out on any future updates. And also, if you check out my last video in the description notes below, I'm going to show you how to profit from a Tesla crash and how to possibly turn $10,000 into $250,000 in 2019 with Tesla puts. And I'll describe what I'm doing with my money for this trade. Thanks a lot for listening. Stay safe out there, and only trade with risk capital, and hope to see you in the next video.